How you guys doing? Good morning. So they said we're running behind, so I'm going to go real quick here through as much as I can. Over the last few years, everyone has been kind of caught up in the hype of cryptocurrencies, ICOs, et cetera. And what I want to talk about today is basically everything else, right? So I always say that a virus is spreading right now. There's a blockchain virus that is spreading. And so while everyone else is looking at kind of the price fluctuations of what are essentially penny stocks, there's this virus spreading of blockchain. And so what I mean by that is there's governments, organizations, and everyday people that are beginning to use this underlying technology in very crucial ways that has a higher likelihood of being used by the masses before the ICOs and kind of the cryptocurrencies. Right? And so a couple examples of those that I want to talk through. First is China. Right? So there's a Chinese conglomerate this week that exported a bunch of gasoline to Singapore. Right? And so they exported this gasoline to Singapore completely on the blockchain. So it was the first full commodities trade that occurred on the blockchain. And the Chinese conglomerate estimates that they saved between 20 to 30% of the transaction fees compared to the normal process. And so you've got this massive conglomerate that's shipping, hundreds of millions of dollars of commodities on an annual basis, and they're saying, hey, there's a better piece of technology out there that we can use to save money. It's more efficient, it costs less. And so they're going to continue to do that over time. Right? A second example is in West Virginia. It was recently announced that there's a government election that's occurring, and there's a bunch of military veterans who are absentees. Right? So basically, they're allowed to vote, but they're deployed elsewhere. And so they're using a blockchain-enabled mobile app to allow these absentee voters to actually participate in a government election. And so you've got the government, right? You've got these large multinational corporations using this technology to accomplish things. And then on top of that, what we see is we see these governments that are saying, not only do I actually want to incorporate the technology, I want to empower people to use this technology, right? And so what we're already seeing today is Tennessee this year has already signed a bill into law that allows smart contracts to be legally enforceable. Right? So this isn't just a pipe dream anymore. The state is actually saying we will legally uphold all the smart contracts that are used within our state. Arizona, the governor, I think it was just yesterday, signed a bill into law that allows companies or organizations to store and share information on a blockchain. Right? So I think most people in this room, we don't think about the legal ramifications of what we've been doing, but once the government starts to put their stamp of approval on the technology and say, yes, you can do this, this is legally compliant, this is legally enforceable when it comes to state and federal law, I think what we're going to see is this mass acceleration, or what I call the virus spreads further. Right? And so what that happens is you go from a one-off commodities trade, you go from a single state making a law acceptable or enforceable, to now there's starting to be announcements where Coca-Cola is saying, we're going to use the blockchain to actually try to monitor human rights throughout our supply chain. Right? Something that has global impact, not only from a business perspective, but also a quality of life perspective. On top of that, then you get, last week, I think it was, there's 5 large healthcare companies that come out and say, we're going to pilot a blockchain use case. And these are companies like Humana and United Health, right? And what they want to do is they want to use the blockchain to actually more efficiently and lower cost store and share data, right? They're more accurate. It costs less money. And so what you end up seeing is this, thing that started in 2008, 2009 as a single idea and a single white paper that really was used to try to build a global currency, this underlying technology of blockchain, and it has spread virally throughout the globe. And this isn't just infiltrating, people who are worried about money or kind of currency transactions. This is actually spreading to multinational corporations, to governments, and to everyday people. And so what I think ends up happening here is there's an influx of attention and capital into a space because of the ICOs and all of the cryptocurrencies. But really what ends up occurring is the underlying technology, right? So blockchain becomes the key component that comes out of this. And not only do we see it in terms of the business practices, but David Sachs recently said that the killer app of the blockchain is going to be capital formation, right? And so what he meant by that is the blockchain allows us to raise capital and to organize capital in a more efficient, lower cost way. And so when you think about everything that occurs in the world we live in today, it's all based on financial transactions, right? There's always an incentive, usually financially driven, to do different things. And so when you're able to take a piece of technology and more efficiently and lower cost organize that capital or raise that capital, it has an impact across every single industry in every single country. And so that capital formation will end up being the killer app. And I think where we're going to first see that is in the format of security tokens, right? And so while for most technologists it's incredibly unattractive or boring at times, when you look at just the overall market cap, right, $700 trillion worth of assets are going to be organized on the blockchain and become liquid, right, that are currently illiquid today. And so I think that's the type of stuff that has me really excited. And it all comes back to this idea of there's an underlying technology that's just spreading globally. And I think it's important for people not to focus on the cryptocurrencies and the ICOs, although that's what gets the headlines, the price fluctuations. Everyone wants to talk about that stuff because it's quantitatively measurable. I think what's more important is this underlying technology that's being adopted across kind of different organizations and geographies. So I wanted to fly through that real quick because I think we're only going to take about 10 minutes of questions. And so I don't know if there's a microphone out there, but as a primer, I'm happy to answer kind of anything that folks have. Nothing. I can't hear you at all.
Yeah. Hey, just wanted to get your thoughts on real estate getting on the blockchain.
Talk just a little bit louder.
Yeah, wanted to get your thoughts on physical assets like the real estate getting on the blockchain with fractional ownership. How near is that future, and how viable do you think that is?
Yeah, so I think that that's going to be the first use case, right? If you think of real estate, there's a hard asset behind it, so it becomes super attractive to more sophisticated investors that have larger pools of capital, right? So endowments, pension funds, et cetera. I think that it's already in practice today. So if you look at like crowdfunding in real estate, right? It's very similar to what we're going to see on the blockchain, but the blockchain is a piece of technology that allows us to not only do it better, right, but do it on a global scale, right? And so I think that, I don't know if it takes 10, 20, 50 years, but at some point, every single asset, specifically real estate, will be tokenized and will be on a blockchain, and people will be able to have fractional ownership in that and be able to trade it with other investors kind of at will, right? So there will still be regulatory compliance, but I think that that's definitely coming and is probably the first place that a lot of the security tokens attack, because it's probably the least complicated, right, compared to, let's say, a company and voting rights and things like that. How are you?
I know it's a smaller market than real estate or security tokens, but where do you see the blockchain technology taking over in the currency
For currency?
world? Yeah.
Look, there will be multiple use cases for currencies, right? So the way that I look at cryptocurrencies today is, there's a couple of misnomers, right? So the people who probably fall in the bucket of the Bill Gateses, the Warren Buffetts, et cetera, their favorite thing to say is that it's used by money launderers and criminals, right? My initial response to all of that is you've got to be the dumbest criminal in the world to use a public ledger, right? Because it's pretty easy to track. The second thing is that, make no mistake about it, the currency of choice of every criminal, money launderer, and drug dealer in the world is still the US dollar, right? And so if you're going to compare it to stuff like that, I think that it's a non-starter. On top of that, I think that digital currency will be a thing, right? I think that many of them will coexist. So will there be a global currency? Maybe, maybe not. Will there be nationally created, right, or nationalistic focused currencies? Absolutely. I think we're already seeing those start to get created. And then I think that, there's also going to be these like company-specific currencies, right? So if you look at like what gift cards are today, these companies can use these, these different types of currencies that can only be used within their ecosystem. And so at some point there will be an Amazon coin, a Facebook coin, et cetera. And I think that it's less revolutionary than people really see. I think that it's just more evolutionary, and it's just a better piece of technology that allows us to do what we're doing today. Absolutely.
I would like to know what you think about the hash graph being centralized And what could we do to keep the progress of the blockchain?
Yeah, so centralization versus decentralization. The spoiler alert is that most of the technologies you think are decentralized are actually much more centralized than people realize, right? So I don't know the exact numbers, but it's got to be over 50% of these things are built on Amazon AWS. Right, so there's single point of failure, all that kind of stuff exists. When it comes to the teams, right, so Hashgraph, Ripple, all these, a bunch of people get upset that they're centralized. It's not the ethos of crypto, et cetera. Look, there's all the internet companies of today probably don't fit the ethos of what the internet originally started out as. Right? And so I think that when it comes to blockchain, it's an underlying piece of technology that inherently started out as a public distributed ledger, but just because it becomes centralized or permissioned or private doesn't necessarily mean that it's not viable. It's just a different use case of a piece of technology. And so if you can kind of look past all of the politics and the kind of sensationalization of what's going on in the market, what you realize is that there's a lot of people in the world, right? And everyone's going to use this technology differently, and that's okay. Right? I don't think that you've got to kind of be a binary outcome of somebody wins and somebody loses.
Hi, thank you for your time. And I have two questions. So my first one is going to be like, what do you think the relationship between the private blockchain and the public blockchain? And the second one I want to know is, do you think blockchain is a technology or is a concept, like it's a thinking, a mindset?
It's probably both, right? I think that there's obviously an underlying piece of technology that exists and has been able to create a lot of impact already. But there's definitely different camps, if you will. I mean, look, it's a unpopular conversation, but if you just look at Bitcoin versus Bitcoin Cash, right? I mean, it's the same piece of technology to a degree, but two completely different mentalities around how that piece of technology should evolve over time. And so, they're both trying to solve the same use case, but they have different perspectives on how that gets applied. And so I think that'll happen not only for the same use cases, but obviously across use cases as well. And then public and private blockchains, I think that we'll see a whole spectrum. So we'll see things that are, fully private, fully public, a hybrid. Again, I go back to the internet, right? The internet is used very, very similarly to, I think, how crypto will be, and blockchain specifically. And so I don't get caught up in like, there's only one outcome here. I think that the beauty of the blockchain, very much like the internet, is it's a platform that we give to people and let them do with what they view as the best use case.
Hello. I want to know, because a lot of people, they are talking about the security token.
Yep.
But how about the utility tokens? What do you think about it? Should company they issue utility or just security instead of utility?
So I'm unpopular in this belief, but I think that utility tokens can be a thing. They can exist. I believe that if you use a utility token to raise capital, you're violating U.S. securities law. The definition of a security is exactly what people are using it for. Unfortunately, today, that's what the laws are. Right? And so I said last night that I think we've trained entrepreneurs and founders to really push the limits of what's possible. And if something gets in their way, just kind of run through the obstacle. And so you see this with an Uber going against the taxi unions and kind of all of that, and licensing. You see this with the housing authorities and Airbnb. But what founders need to understand is when you go up against the SEC, the federal government, and U.S. securities law, it's a little bit different. And so in the future, I hope that there is a evolution of the current laws that allow people to use these utility tokens for both fundraising and for the incentive tools within a network. But currently, as it stands today, that's doesn't seem like that's possible. And so I think that the best advice people can have is to just go ahead and treat them like securities. Go ahead and do the KYC, AML, and kind of just treat it as if in the most conservative way possible.
Is it currently there's no law for the utility token?
I didn't understand.
Is that don't have really any law to govern the
there doesn't need to be a utility token law, right? There needs to be a U.S. securities law, and the U.S. securities law says if you raise capital from unregistered, either you're unregistered with the SEC or you raise capital from the wrong investors, you can go to jail. And so there's a lot of people in here who may want to gamble with that and try to go in front of a judge and argue that what they're doing fits within those rules, but I don't want to go to the courtroom, right? Okay. And so I'm gonna just completely avoid the entire situation. And so I know I'm taking a conservative view on it, but that's where where we've chosen to kind of come out on it.
Okay, yeah, it's better to play safe than sorry. Thank you.
Absolutely.
Hey, thanks for your time.
Absolutely.
So new to all of this stuff, it's really interesting. Was wondering your thoughts on this mining stuff that I keep hearing about that I want to put some money into possibly. Is it real? Is it safe here? International, that kind of thing.
Yeah, so in 2016, it's actually the first thing I ever did in blockchain space was I created a GPU mining facility. I've built a number of them now, and everyone else that I knew was saying, don't do it in the United States, go find cheaper power elsewhere. And my take was, you will have to pay taxes here, you'll have to follow regulation, but there's nowhere safer than the United States. And so people ran to China, to Iceland, to all these other countries, and they're all coming to the United States now. Right, and so the reason is because those other countries, there's instability, and so China kicked a bunch of them out, et cetera. And so if you think of what mining is, you're basically buying a piece of hardware, you're renting computing power to a network to validate transactions, and you get paid to do it, right? And so I think that in the future, we're going to see both mining via hardware, but we'll also see the proof of stake and kind of transaction validations through a more kind of software-heavy solution. And so as long as we have these decentralized networks, we're going to need to incentivize people to validate transactions on those networks. And I think that it's not going anywhere, right? It just depends on how you want to play in the space. I don't think anything's going to happen to Bitcoin mining for a while, right? And so I think that the economics may change, the regulation around it could change, but in order to run that network, you need hardware that actually validates those transactions. And so as long as that need is there, then mining is going to be a thing. Yep.
Hi, my name is Sanjeev. I had a general question. Do you think Bitcoin is really different from all the altcoins and tokens out there? Because it does have a premium value when you compare the price that the market gives it. And do you think that premium value difference will be maintained going forward, or something will replace Bitcoin?
Yeah, so there's two things that I used in this discussion. One, I should call out, I don't own a single thing other than Bitcoin, right? Not because I necessarily think Bitcoin is I'm not necessarily a Bitcoin maximalist or anything like that. I think that it has the lowest risk associated with it, right? And the two reasons are, one, it's anti-fragile. Every single thing that could possibly have gone wrong has, and it's still here, right? And it's continued to grow in value. And so I think that that will continue over time because you just can't kill this, right? The second thing is I look at anecdotal examples. So pretty much everyone I know under the age of 35, not a single person is buying gold, right? They're buying Bitcoin. And what they're doing is they're putting their faith, belief, and trust into a store of value, right? And so while today there's some impact of that in terms of the more people that buy, the price will rise. And if people start selling with taxes, whatever, it'll drop. What ends up happening is it pays out over decades in time. Right? So all the people who bought gold for hundreds and hundreds of years, right, we saw eventually there was an equilibrium in the market. So I think that'll eventually happen with Bitcoin, but it takes a really, really long time, right? And so we're, I don't know how many years into gold, right? But we're a lot farther along in gold than we are Bitcoin. And so I kind of take the approach of just everyone breathe, right? It's going to be okay.
Thank you.
Yeah. Anything else? No? Just yell out. They said last question. I'll repeat it.
So you often talk about tokenizing the world, right? So from a regulatory perspective, what has to happen in order for an individual to tokenize their assets and monetize them?
Nothing. So we already do this today, right? So the question was, I always talk about tokenizing the world, right? So it's this concept of taking real world assets, equity, debt, real estate, et cetera, and putting it onto the blockchain, both to raise capital and then manage the ownership of that asset on the blockchain. And so, if we think about how that happens, what I essentially do is up until about the, let's call it 1980s or so, is what I call the analog era of securities. Everything that is a security today, there's a paper share. You gave me money, I gave you that paper share, and that's how we controlled who owned what, and you could actually redeem your ownership in something was via an analog share. 1980s come or so, we started adopting what I call the electronic era of securities. And so we had electronic shares. I could go on a computer, or I could see how many shares I owned. I could actually trade on the computer or on the internet. The key piece to that is that electronic share is not your ownership. Right? You can still call the company up and say, send me my certificate. They send you a paper certificate. That paper certificate is your unit of ownership in that entity or asset. The electronic share is just a representation of your unit of ownership, and you're able to trade it much easier. What we are now going into is this digital era of security. So it's the first time that we're actually going to get rid of the paper shares. You're going to get a digital token. It has a public and private key. You cannot call a company up and say, send me my paper share, because there is none. That digital token is your unit of ownership. And so what that allows for is, one, the three things I'm really excited about. So one is we are able to reprice assets, right? Today, most people in here would argue that the US stock market is a free market. Complete bullshit. Every single person that's unbanked is not able to participate, and there's a lot of investors around the world that have a very hard time participating in the US stock market because they don't have a bank account in the right jurisdiction, they can't get through a brokerage for whatever reason. So when we start taking these assets and we expose them to a true free global market, what ends up happening is there's always somebody willing to take a lower return profile. And so the investors today in the United States, let's take an infrastructure investment, they look for 7 to 10% annualized return. There's investors that are in Russia or China or somewhere in Europe or South America, they're perfectly happy with a 2% annual return, right? Because they get to buy American infrastructure and they're going to get 2% annual return. And so they're not exposed to that yet. As that happens, people with lower profile returns will enter the market, asset prices will rise, and I think that a lot of people that are in the traditional finance world are going to kind of get shocked or blindsided by that. So that's one. Two is this idea of fractional ownership. Today, if I take a building, for the most part, I've either got to go into a group of individuals that are high net worth, we buy the building, and then it's a collective group, we make a decision as to when to sell the building. Every once in a while, we can break it up into shares in an LLC, but if those shares are worth $100, if I only have $50, I can't buy a share. Obviously with Bitcoin, let's call it $7,000 today, if I have $50, I can buy a piece of Bitcoin. And so there's fractional ownership. And then the last piece is the capital controls. And so probably the part that gets talked about the least, but is the most important, is we are absolutely busting capital controls when we digitize all these assets. And what I mean by that is, if you look at China, for example, and all the anti-capital flight regulation, it's very difficult for a Chinese investor to take capital or currency, send it to the United States to invest in assets. Well, when all of a sudden we can now take property, which is Bitcoin, Ethereum, these digital assets, and we can send that instead of that fiat currency, what you end up doing is you're not skirting the rules and regulations, you're just removing the middleman. You no longer have to go through all of the brokerages, et cetera. You're able to use this digital asset to bust the capital control. And so if you think about all the capital that's kind of prevented from entering into, let's say, the US financial system, there's going to be an avalanche of capital that comes in via these digital assets, and it's going to completely revolutionize the way that I think we look at investing. So I think I'm going to get, all right, hurry up. I'm going to get kicked off probably.
What are your thoughts on, from the fund side, investing in equity versus investing in tokens?
So I don't think that there's a difference, right, in the future. So the equity will be tokens. And so when I go to invest in a company, we are not going to ask for paper shares, right? We're not going to ask for those analog ownership units. We're going to ask for a digital token. It's got a public and private key, and that represents our ownership. And so there is no other version. There's no, can I trade my token for paper? It's just that token is the ownership unit. And so this isn't theory. We're, as been reported in the news, we're out raising a pretty sizable fund to go do this, because we think that this is going to be the future of finance, and whoever's got the most capital in the market, we think can have quite an advantage. So, all right, thanks, guys.